Hello, everybody. Welcome back. Liquid Sundays. It is Sunday, May 31st, the last day in May. And this is our Liquid Sunday SPX overview. And we're going to look at June prep statistics. Um, so, in front of us here, we'll jump right into the chart here. We got some notes here on the SPX monthly chart, cash session, market recap. Week ending May 29th, 2026. It was a short week for the holiday. It was a great week for stocks. Fresh record highs across the board on the AI boom, plus positive US Iran ceasefire news potentially. Key closes Friday. Dow 51,032, up about 0.7%. S&P closed at 7580, plus 0.2%. Nasdaq 26,973, plus 0.2%. Weekly gains on the Nasdaq 2%, S&P 1%, Dow nearly 1%. So May totals Nasdaq 8% and S&P 5%. That was one hell of a May, April and May. So what moved it? Dell, obviously, 29%. Government contracts. Obviously, president said go buy Dell. Beginning of the month. Explosive on massive AI server earnings. Tech infrastructure stocks flying. Micron, Hewlett Packard, actually HPE, SMCI, all strong. Geopolitics, tailwind. Obviously, oil eased. Risk appetite up. And earnings mixed, but AI narrative won. Bitcoin at the time was holding around 73K. I'm not sure where it's at right now. We'll take a look at that as well. But it was a great week, and I hope everyone was able to relax, reset, and recharge. So we'll get the notes off the board. Monthly, we really are, um, stretched, if you will, but at the same time, let's take a look at this. Take a look at this breakout here. So this is our bear market of 2022. So this breakout here, the extension on the 3618 level here would be around 883.25. I don't know if we get there, but obviously broke out from the 2618 level. And if we move our fib up to the breakout here, and we use this prior resistance as our support here, and we use the 2025 resistance here as our breakout level here. We broke out obviously from 6950. And if we go one step further now and we move our chart up to the most recent swing high to low here from this breakout, do something like this. We got about 70, we hit 71, 79. That was the extension of, basically prior resistance becoming support, breakout. And now we're, pretty close to the 1618. So I wouldn't be surprised if we hit that, obviously, this year, but we might get a little pullback first. Maybe we get to 7,700. Maybe we get a little pullback after that. But if we take even a closer look here, and we take our breakout from this level here, from this little April pullback, right? We just stretch this out just a little bit. We got about 77.47 on the upside now. So yeah, that would be like this year's basically retest of the breakout, and then obviously extension here is 74 70 74. I'm sorry, 77 47 45. If you want to use, you can also look at it this way. If you want to use this level here as our resistance, you can say that we broke out from our swing high to low resistance here. But anyway, so these are our monthly levels here, and if you take things from basically month to month standpoint, and just take each month and just measure them out. Are we trading above 50% of the previous month in this candle here? If we're trading above, looking at this, back in February, um, this February drawdown into March. Obviously, this April candle here recovers, 50%, and then trading above 50%, we target the resistance level, obviously, of the candle there, and then we target the breakout above that. If we take this candle here, swing high to swing low, basically taking, large time frames and kind of breaking them down on a smaller scale for you right now. Um, let's just say that the breakout from last last month almost got us to the extension here. And now that May is concluded, um, we can just take the swing high of the month and the swing low of the month, and we can get some pretty clear levels. So 73.82 is going to be 50% of this level here. That that's going to be, I'm going to call that, let's say, key support. Should we get a pullback into June? And obviously, if we break down below that, we'll look to support down here at 71.70. I don't know if we get down that far or not, but just giving you kind of my take on it. A breakdown below 71, 72, 71 ish would get us back kind of this previous resistance here from early in the year. If we do get this kind of anticipated pullback, that's probably going to happen in this weaker part of the season. So, but we'll see what happens. This is monthly charts. Let's just look at our weekly charts now. Our weekly chart here. Get a little bit more. So you got that 73.50ish, let's say, on the monthly as a support level. So now we got our weekly chart here. Obviously, SPX cash session. Let's take the swing high and the low from the week here. Okay. All right. So here is previous week. Obviously, the high here, 75.99, almost 7,600. That's our resistance level. And 75.50 is going to be kind of our weekly pivot, and 7,500 will be our support. And again, I always look at it both ways. So should we break down that support there? I look for the extension to the downside. So 74.38 would be our support below 7,500. So this is our weekly setup. Just because I kind of just showed you on the monthly chart, let's just for ha-has, we'll just go over and see kind of how the week before played out, right? You've got, um, basically we were using 74.20 as our weekly pivot here, and a breakout above 74.05, 75.20 here, 75. I think it was like 75.18 ish. And we were looking at the extension here. We almost got there. Um, 70, 7609. So we were about 9 points shy of hitting that extension here. And if you want to use the kind of resistance from the previous week here, then you're a little bit higher here, 7630, which I thought was possible last week, but hey, we came up a little short on that. So anyway, um, so that's your weekly. You got your weekly levels. Um, right there, right? 7,600, 7,550, 7,500 is our weekly range support from previous week, and that's what we're going to look for. Are we trading above 7,550? Then we will look to 7,600 resistance. Are we going to break out from that? If we do, 7,662. Should we break down 7,550? We'll look at 7,500, and below 7,500, we'll look at 7,438. All right. These are our weekly levels. Let's go a little bit more. Let's get a little bit more granular here. All right. So we got our daily levels here now. You can see here on the daily, we had this little drawback here. I thought maybe we'd get a little deeper, and we did not. 73.30. This is going to be, on daily level here. If we break down some of those weekly pivots and the weekly support here, this 73.32 is going to be very important. So we said 73.50, right? On the monthly breakdown below 70, 73.50, and this is going to be kind of key support here. 73.32, we'll call it. So, but these are our daily. This is our daily chart here. So now basically, if we're looking at this on a daily perspective, we know that our weekly is 75.50. Change of character here. You can see, these. This is the Lux Algo Smart Money Concept Indicator. I like it. I got basically like these are confluence candles. So like when it's when they're red, you're kind of anticipating a little bit of a drawdown, and then once you get change of character, something like this, they turn green. Anyway, something I've played around with for a few years. I kind of like it for a visual. So break out above here. Our daily candle from Friday was a little doji, kind of indecisive. Some people might say, "Oh, it looks like a abandoned baby." It's not really that far off from the previous day, but there's obviously some reasons to be um, cautiously optimistic, right? We do have some divergence, and we are oversold on multiple time frames, but we can stay oversold for quite some time. There is some other indicators and things I kind of want to bring up that we don't talk about too often, but I do pay attention to them. They're widely used and documented. And John Carter has, you know, gone over all this stuff in Mastering the Trade, so it's pretty relevant. It's a big part of my process. Once we start getting kind of extended on time frames and RSI and stuff like that, I'll start looking at, Bollinger Bands, Keltner channels, and see where price is in that scheme of things. So um, we'll take a look at that in a second here. Let me give you your kind of daily levels here, so we'll kind of know what to expect. When the futures market opens up at 6 o'clock. So we'll take the fibs on this little guy right here. All right, so here's Friday's levels. Obviously we've got 7,600 about there as resistance. The pivot on that is 75.80. That's right around where we closed, and support is 75.63. And then on the downside here, a break below 75.63. So these are like more near term targets, right? That we can kind of start mapping out as we get closer to the open and kind of see where we're trading at. I always take a top down approach. So basically, a breakdown below our close here. We'll look at 75.63, and then this extension here to the downside 75.40. We know 75.50 is an important level, right, on that weekly chart, and above 75.80, obviously 7,600, and above 7,600, I'll look for 76.21. Okay, so there's our monthly, weekly, daily kind of breakdown, and how we can kind of look at it. Remove these drawings here. Let me bring up this screen here. We're going to take a look at the Bollinger Bands and the Keltner channels. I'm just going to change the stream here. Let's see here. Actually, you know what? I'll just bring it right up on the chart here. I don't have to change anything. We'll just bring it up here, and I'll look for our Bollinger Bands. Here we go. All right. So, um, let me see something here. I want to bring up the Keltner channels. Keltner channels. Okay. All right. So you can see here we're on the um, we're above our our Bollinger Band. This is your mean your mean here. Excuse me. And anytime you get extended away from the mean, you look for price to come back um, for a reversion, right? So extended comes back, extended will likely come back at some point, right? You can see how that works out in the past. Okay, test the upper bands and the upper channels, and it comes back to the mean. It comes back to the mean. You can kind of stay bullish as long as you're on the north side of the mean here. And once you start breaking down, you get a little bit more, chop. But you got the bottom here, and you can trade that back up to the middle here, back up above the middle. You trade it up to the top, and so on and so forth. So this is kind of a good visual to understand when you're, with any stock, where when you're starting to get extended, are you above, the upper portion of the Bollinger Bands and the top of the Keltner channels? Probably going to get a pullback at some point. So, yeah, something to be mindful of. And then the other thing I wanted to go over was um, we'll go over. I have some notes here for June. I told you I wanted to talk about some June prep. Let me grab that here and I'll put it up on the screen. Let's see here. And this is pretty much um, Stock Trader Almanac notes. I'll put it right up on here for you. All right. Kind of small. I'll read through. You can read it though. Okay, so basically, this is just a summary of kind of keynotes from Stock Traders Almanac for June. So, core message: June is historically a mediocre to weak month, especially in midterm election years, marking the end of Nasdaq's strongest 8-month seasonal stretch and the start of summer doldrums. So this data is comprised from 1950 to about May 2nd, 2025. The Dow and the S&P 1971 and Nasdaq 1979. All right, so key seasonal warnings. Summer rally equals the weakest of all 4 seasons. Week after June triple witching. The Dow is down 28 of the last 34 years. And the highlighted note was very poor. End of quarter portfolio pumping, risk on last trading day of June. Midterm election June's ranked number 12, worst for S&P, Dow, and Nasdaq. Recent record last 21 years, S&P plus 13, minus 8, for an average of about 0.005%. That ranks 11th. June vital statistic, historical rank out of 12 months. Dow Jones ranks 11th, S&P 9th, and Nasdaq 6th. Russell 1000 9th, and the Russell 2000 7th. Average percentage change: the Dow minus 0.2%, the S&P plus 2%, Nasdaq plus 1%, Russell 1000 0.4%, and Russell 2000 0.8%. So midterm year averages are worse. All indices minus 1.8 to about 2.1%. Let's see here. Notable extremes. So the best June in 2019, the Dow Jones Industrial was up plus 7.2%, the S&P plus 8.2%, and the Nasdaq was plus 16%. The worst June was looks like 2008 and 2002. There was double-digit losses, and strongest single weeks days often in early June, weakest frequently late June or around 6/11 to 6/30. So we can kind of look to see if around those dates there we start to see some real weakness. That's something we could fade, obviously. Trading day and options expiration patterns 1980 to 2025. So the first trading day of June is slightly negative, bias across all indices. Monthly options expiration day week mostly neutral to slightly negative. The week after monthly expirations are mixed, often weak. First trading day overall percentage time up 54 to 65%, small gains. And the last trading day percentage time 53 to 67%, small gains. Strongest in small caps, excuse me. Bottom line, statistically, June is not a high conviction bullish month, especially post triple witch and midterm years. So growth indices, Nasdaq, Russell fare better than the Dow, but traders should watch the last week of June and immediate post triple witching period. Downside risk. Classic sell in May, but June can still sting territory. So um, hopefully that's something, mark that stuff down on your calendars. Some of those dates there. Um, we can watch out for that stuff. All right. I would like to bring up my, let's see here. We'll remove this here. And I want to bring up the SPX 500. We'll take a look at and do a little bit of review from Friday. Friday's plan. We'll look at ES or something. SPX. Let's go here. Let's see here. We'll just put our. This is what we want to do here. I don't want to remove the indicators. I just want to remove this. Stand by for 1 second here. All right, 15-minute chart here. Here we go. Oh, this is our cash session. Let's look at SPX 500. For those that are not aware, I was using US 500 for the majority of our after hours electronic trading hours sessions. and they recently changed, so like the deviation is off slightly. It's at US 500, it's about 500. I'm sorry, 5 points higher than the SPX cash. So SPX 500 lines up better with SPX proper cash session than the US 500. So if anyone was wondering or missed that, I'm using SPX 500 to track the SPX after hours. All right, so here is Friday's plan here, and I kind of have it notated with all the levels and everything, so you can kind of see what transpired already. So levels were 75.80 resistance, 75.68 pivot, and 75.56 support. Our bias was bullish above 75.68 and bearish below. Setups long above 75.80. Obviously, that's our resistance and break. Target 75.95 to 76.05. Stop would have been 75.65. And short, obviously, you can play the resistance level, rejection, back down to the pivot, and below 75.68, you target support at 75.56. So all of my plans, you'll notice, are all asymmetrically written. So I'm trying to give you the best levels to go long and short off of, and so you can plan accordingly for, you're going to risk one to make two. So if you're risking 8 points, you're looking for 15, 16 points. If you're trying to grab 20 points, you're risking 10 points, and so on and so forth. And then basically I kind of have it notated here. This was the open. These are 15-minute candles here, and this is our basically our pivot. So we open up above our pivot. Um, I'll tell you what. Let me go on the 5 minute so you can kind of see the price action a little bit better here. So, and this is something that I traded, and this is something that I called out. I called out for y'all on Friday. So basically, long, above our pivot. Um, I'm focusing on long, and I did notice that we got a wick um, above, below our 786 level. Didn't even touch our pivot, but it wicked off of this level here. These equal lows here, and um, closes above the 786 level. I don't always put all the fibs on here, but I am for today just because I want to kind of point out some of the relevance here. So the 786 to the 618 level is what's known as the golden pocket here. So above our pivot, if we hold the 618 level here, um, obviously we can target the 786 level, but above 786 is a clear kind of signal generally that we're going to test um, the resistance. If we reject the 786 level, there's a very good chance that we're going to obviously come back, test the 618, and then the pivot, and obviously so on and so forth if we break down. But a lot of times I've noticed, on the 15-minute chart, it becomes a little bit clearer. It's kind of difficult to trade off of a 15-minute chart for most people, like right off the open, right? You're like, oh, well, what's going on? But something that's kind of really cool is when you break down a level and you come back and recapture it. That's usually that's what's known as like failed breakdown, or if you go above a level and come back down, that would be a failed breakout. And those are kind of the best ways to get on the opposite, on the right side of the trade, and the kind of the earliest entry. There also can be difficult. Anytime you're playing counter, right? It's difficult, but we got really clean action here. If you really defined risk and clean action here from Friday's open, and then a pullback right back down into our key levels. So something just to be mindful of. You don't have to trade the open. Even if you didn't trade the open here, if you wait, after let's just say like 10 o'clock here. I know some people did fade this move, right? You basically look for a reversal, you get an order block, and now you're saying, okay, well, I'll short 75.95, and I'm going to target the resistance here. So you're looking at 14 points to the downside, 14, 15 points to the downside, and then your stop is just like I said, 7, 8 points above, right? So this was ended up being a pretty choppy session, but there was pretty nice, honestly, kind of level to level trades. A little bit choppier through lunch per usual here, and then we never really got back up above our 1618, right? So we kind of broke out, came back down here, and kind of tested the pivot again. I think the pivot is generally a good spot, and especially when we're bullish, is generally like a good spot just to kind of like understand, like, okay, if we're bullish, I'm just going to go long. I'm going to set my stop, minus whatever half of whatever my target is, and that just keeps it kind of like really clean, a really clean setup. So um, that was Friday's action on the SPX proper, and same thing on ES. ES is, you know, it's not for everybody, but it's very straightforward as far as, there's no theta. It's you're I'm looking for this amount of points. I know exactly when to cut it. There's options can be a little bit trickier because your premium kind of starts fluctuating all over the place, and you know, one of the worst things that you can kind of do is stare at your P&L when you're trying to trade. Like SPX, short-term expirations here kind of get you, shakes you out of your positions a lot. But it's uh, it's a defined risk, right? I mean, futures, if you're not very disciplined and set your stops and your entries, precisely, then you're um, you're in jeopardy of losing a lot more because if you're doubling down on doubling down when there's a drawdown, you're just can compound, right? You're gonna instead of what you're trading with when it's options. And let's say your contract is $1,000, right? You're willing to lose if it matches your portfolio risk profile. You're willing to lose $1,000, and that's what you know. But on futures, if you're trading the ES specifically, and the thing, trading out of a big account, you're in jeopardy of hitting your whatever your margin is. So and the margin on ES, and especially NQ, is very high. So you can lose a lot of money if you're not very disciplined, right? You go on tilt and you keep doubling down on a loser on futures. It doesn't work out well. Not that it does with, you can do the same thing with options too. You got to be disciplined on both things, on both instruments. But I just think, yeah, it's futures is pretty really kind of well defined as far as um, how many points and when to stop out. If you're just trading one lot, and you say, okay, I'm gonna long the I'm gonna long this level here. I'm gonna take 75.95 profit. Or if I'm in two lots here and I long this here, and take this take one off, and then kind of drag my stop loss up with it. That's kind of a nice way to do it. That's actually how I did it. I traded MES on Friday, and that's exactly what I did. I went long MES here, and then I basically um, took took profit, and then I trailed and I stopped out. I think on this candle here, so it worked out pretty good. and then I was, kind of done for the moment there for the morning. So that's basically that's the action from Friday. Any questions?